Hey guys, this next talk is going to be amazing. These guys are home run hitters. We got Justin Ballard, amazing deal he just did, JAI Energy, Mawson Industries, Texas Pacific Land Corporation, and Nuckolls, Ryan Nuckolls, PumpJack Power. This is land and energy.
Absolutely, yes.
Yeah, thanks for having us, John. We appreciate it. And you know, I guess we were just going to kind of talk about the deal we did in West Texas with TPL and kind of how to put some of these deals together and looking for opportunities and how to, I guess, put parties together that can make something like this happen. There's a lot of things that go into it. And even though we did not work with PumpJack on that deal specifically, we are doing some other things with them as well. So there's a lot of power to go around, and there's a lot of groups that you can work with, and we're excited to work with them too. But you know, I got to give a shout out to Priority Power. I'm sorry they worked with us on that deal, and they did a good job too. So, but I can fully endorse these guys as well.
Appreciate that, Justin. No, guys, you know, from a land and energy standpoint, I kind of talked about this yesterday during my From Permit to Power Flow speech. The game is changing every day, specifically in West Texas. The days of people running around and just trying to grab excess capacity off the grid, that game is becoming more narrow and narrower. While Bitcoin mining is amazing, helping stabilize the grid, the barriers to entry to market for new miners is becoming more and more tough, right? The capital it takes to go scale a true land development, right? What I really tell all miners, you know, the max that I'm really seeing these days that a mining group can go really pull off a public substation without putting the CapEx up to upgrade a substation that you don't own or control is really anywhere from like 20 to 25 megawatts. So if you really want to go play and do something at scale, right, you have to have a contiguous land acreage to be able to go do that. And I think Justin can talk about a little bit about, you know, what it really takes to put a land deal together that really has the capability to scale a large-scale mining operation.
Yeah, so I come from the oil and gas space, and I worked in land, and I'm an attorney by background. And so Ryan's right. You really have to go and find a position that has enough power on it with, and you don't, like you mentioned, you need a contiguous property because it's tough with the amount of parties involved and everybody, you know, this is a fairly new industry where you're going to have a lot of people that are wanting to get in it, and they hear about all the money you can make in this, and you got landowners that want a piece of it, and they, you know, they try to equate it to their oil and gas royalties and things like that. And it's like, look, this is very similar, very, very similar industry, but it is not identical economics, and you do have much shorter cycles of booms and busts. Well, the busts can be longer sometimes, but you do have shorter cycles where things are high. And so you got to factor that in when you're an owner and you're trying to get into the space a little bit and take a little bit of money off the table from the miners. But the thing that attracted me to the opportunity with Texas Pacific Land was their land position. And, you know, they have about 900,000 acres in Texas. They're the largest owner of land in Texas. And they obviously have a ton of substations situated on the property. But even within that, like you mentioned, there's certain levels of power that you need to meet, especially for these large-scale groups that want to put big projects together. And so we actually had a couple 10-megawatt sites that didn't make the cut. And altogether, we have 4 sites that make up the 120. All of them are within about a 40-mile radius, so you get some efficiencies from kind of having a centralized man camp where you can have employees that can work all the different sites and kind of schedule them out. So there's a lot of things to factor in when you're looking at it. But one of the most overlooked ones, and you can probably talk to this some, is the credit worthiness aspect that you need to have if you want to build a large mine. And that was why we went and targeted a public miner to help us on that front. We're a startup. Obviously we're new to the game, and we didn't have, we have about a 7-megawatt site, 7.5 megawatt site in Wyoming, but we didn't have any ability to kind of put up with the collateral needed for these substation contracts with utilities. or with the retail provider. So that was a big aspect of why we had to bring in a big miner like Mawson, and they met those requirements. But that's something that people that are looking to get in the space, everybody asks for I want 10 megawatts, I want 20 megawatts, I want 30,
megawatts.
I want all these megawatts. And it's like, look, you might be better off just starting with 1 or 2 and finding a way to make that work first, because as we're seeing right now, you see this big contraction in price, and it's like, look, this is where if you've got out ahead of your skis too much and you don't have, you finance a bunch of machines at higher prices with these kind of, no offense to any of the financing people in here, but the loan shark type loan structures that you're looking at, you're going to get yourself in trouble if there's any downward pressure on Bitcoin prices. And that's obviously what we're seeing right now. And it's kind of, in a way, I don't wish this on anybody, but in a way, there's a chance for us to really take advantage of that on the deal out there in West Texas, because we hadn't bought the machines yet. And so now from a timing perspective, it's like, hey, this capital entry cost is going to be a lot less than what it was just 2 months ago. And that's something for those of you in here that are either looking to get in the space or haven't gotten the space yet, or looking to deploy some capital but hadn't found the right opportunity yet. It's scary right now, but this is the kind of blood in the water time where if you have the capital behind you, this might be the deal of the opportunity of a lifetime to get up and operating over the next 6-7 months. And yes, it's going to be a lot skinnier than what it was before, especially last year. But it's still an opportunity for you to build a strong and healthy business that is not over leveraged and hasn't overspent on the capital side. So I'm excited about the future of it. I know it's going to be ugly for a little while, and it's going to hurt, and we're going to have some capitulation. We're going to have people that are going to go under, and hopefully we're not one of them. Hopefully anybody in here is not one of them. But there's going to be opportunities on the other side of this. There always is, and it's scary when you go through it. But it's also usually the time when the smart people and the smart money find ways to position themselves for 2 years from now, 3 years from now, when we get it past the next halving and see the next parabolic move up.
Absolutely. To jump in kind of right there, guys, the thing that Justin and I both come from an oil and gas background, where I always tell people this. If you kind of think about where the oil business was in the 1920s, right? Everyone's still kind of starting to drive around cars. We haven't really seen the mass production of automobiles. But Bitcoin mining is basically where the oil business was in the 1920s, right? 1930s, 1940s, everyone started to mass produce cars, started to use more gasoline, right? More mass adoption. That's where we are with Bitcoin. In the next 10 to 15 years, you are going to beginning to see the beginning of the hyperbolic S-curve of mass adoption users, right? So I think while we are in a little bit of a downturn, which is kind of funny because I've been holding Bitcoin since 2015, and if you'd have told me in 2015 Bitcoin was going to hit $20,000, I would have been jumping around like a wild man, right? So Justin is right. It's about deploying capital in an extreme strategic manner, right? If you would have bought an S19J Pro 6 months ago, you'd have probably paid a 50 to 60% premium on that machine, and that greatly affects your economics, right? Kind of going back to what Justin was talking about of simply starting a snowball, right? Every week I get thousands and thousands of phone calls, emails. Oh, I want 100 megawatts. I want to come to Texas. I want to go do this. Are you credit worthy to go buy that amount of power? If I was to sell someone 100 megawatts, right? That's about a $300 million trade for my company to make. While we have the complete capability to make that trade, as a power provider, what I'm really doing is I'm a lender. I'm basically taking the credit risk, the liability, because we are a power provider, and I am saying this consumer is credit worthy for his business to pay for this power, right? What I always tell people, for every 10 megawatts you want to buy on grid, you need to collateralize about $1 million, right? How do you go collateralize? You get a line of credit, you go get a surety bond, or you post cash, right? And so, everyone has a price of poker they can go play. And so really the best thing to do, if you're a startup miner, a small independent, the best thing that you can go do is exactly what Justin is doing, is building relationships, doing strategic partnerships, right? Because 2 great, 3 great entities together can go do more bandwidth, right? And that's the reason why you see all of these large public miners doing these huge mega projects is because they have the access to public markets. They can go get that credit worthiness. And so at the end of the day, just figure out what price of poker you can go play, right? Figure out, hey, how credit worthy am I to go play this game? So let's say you're credit worthy for 5 megawatts, right? You never miss paying your energy bill at all, right? As you're paying your energy bill, you are building creditworthiness with your power provider, okay? So let's say your power contract comes up 36 months later, right? J Energy's never missed a bill with us. They're awesome, rock stars. Hey, Nuckolls, we want to go do a 30 megawatt project, and our load with you is 10 megawatts, right? Well, because you're creditworthy and you've never missed a bill, that becomes a lot easier to do compared to a startup who has no credit history or has no paying bills. And so, simply put, in times like this, where obviously it seems like we're in a down market, even though the price of Bitcoin is still, at a very healthy margin, in my opinion, this downturn that we're witnessing, in my opinion, really will be the last time that you can buy low and sell high. Because 2.5 years ago, I bought some oil and gas production at sub-zero pricing, and I was scared shitless when I bought it, right? But 2.5 years later, we're sitting at $100 oil. Bitcoin will do the exact same thing. I'm not going to lie. The next 10 to 12 months in Bitcoin, it's going to be tough, guys. The Fed is restricting the monetary supply, right? But we all know 2 years after bear markets, you see bull markets. And so setting yourself up for success and riding that wave, you are going to immensely profit from it. Immensely.
Yeah, and I agree with most of that. I do think this business, mining in particular, is it's very correlated to the oil and gas industry. So I do think we're always going to have booms and busts, because just like in oil and gas, right now they're being, people are still kind of tightening their belts. Depressions and recessions are probably the best way to really. And I apologize for any of the ESG proponents in here, but I'm excited because I think this is going to be one of the times where we can really kind of bring down and destroy the ESG narrative. That was something that was birthed because of basically loose money and money flowing around that was being printed like crazy, and people are looking for things to kind of be a new money maker for them because there's so much free money running around. Now that it's going to get tighter, you're going to see a lot of that rhetoric die. And so, I'm getting kind of off on that, but that I think you're going to have these booms and busts all the time. And so just like in oil and gas, where you're going to have high prices right now, people are going to get away from that. They're going to start drilling more, and they're going to start bringing more production online. The public is going to be clamoring for it because I don't know how many of you have had to re-up on your retail power contract for your house, but it's going up significantly. I mean, I know mine's coming up, and I'm going to be looking at like 16 cents a kilowatt hour instead of 9. And so there's always going to be, the best way to defeat high oil prices is high oil prices, because it's going to bring more people on. And it's the same thing in mining. You're going to see people that, you're going to have another parabolic rise in Bitcoin in 3 years, 2.5, 3 years. And at that time, you're going to have more people want to pour into the space, and they're going to be paying too much for machines, and they're going to over leverage themselves, and they're going to pay too much for power to run these machines, and it's going to be the same thing over and over. So I do think you're going to have a boom and bust cycles in this industry, very much like oil and gas. But to get back to the kind of building a site and putting things together, there's a creditworthiness aspect to it that is huge and is very overlooked. And then there's the aspect of like, how do I secure my site, and how do I prevent anyone else from getting to this site? And the way we did that was with TPL, and basically going in there and showing them that we were capable of putting something like this together and securing the rights to the power at the substations, and then using TPL in their access to the property to prevent anyone else from getting in there, and then packaging up a deal to kind of make it attractive to a miner. So you got to know the economics. You can't get too greedy, and you got to understand that they've got to be positioned so that they can thrive in a bad market like we're coming into right now. If they aren't able to succeed, and you're an owner that's trying to basically piggyback on something or take a royalty or take an override or whatever, you got to do it in a way that where they are going to be able to still survive these kind of negative downtimes. And that's we kept that in mind when we were working with them. And it's funny because at the time, some of the groups that were involved didn't want to negotiate the way I felt like we should negotiate, mainly because I am a miner and we understand like how important the OpEx side of things are. I mean, we've had to shut some stuff down at our site in Wyoming just because prices they have real impact, and so it can change very quickly. I mean, it wasn't very long ago we were making, because we use natural gas, about $40 to $45 an MCF. Well, that's dramatically changed, and when you couple that with rising gas prices, it can really it's a double whammy on you. So it's something that you got to keep in mind when you're trying to put these deals together, and especially if you're trying to package it up and get someone that is creditworthy. You got to understand the market, you got to understand the economics, and you got to be a partner, even though you're not legally a partner. You need to act as a partner to make sure that they have the capability to thrive even in these bad environments. So.
No, that's a great thing. To kind of go back to a point of securing a land position, right? I kind of was talking about this a little yesterday in my From Permit to Power Flow speech, but after let's say you have a piece of land, right? Hey, I've got this piece of land and it's near some high voltage power lines or a substation, right? The first thing that you have to do is you have to work with your local power provider to figure out, hey, what capacity is at this location, right? There is a lot of land promoters out there basically marketing land saying, hey, I have this capacity, transmission providers told me, I have 20, 30, 40 megawatts there. You never want to call someone obviously a liar, right? It could be very well that they were told that, and at that day and time, there was capacity there. At any moment in time, someone can come in right behind you after you had that conversation with the transmission provider and take that capacity from you. Snap of fingers. So be very cautious of people promoting land projects saying, I have this capacity, I have that capacity. You might have been told that, but until you physically sign a facilities extension agreement with that transmission provider and you pay that CISC cost, that is when you physically lock down that capacity, right? And so it's kind of like as you're putting these deals together, well, what's the first motion, right? What's the first thing I need to go do? In my opinion, as the power provider, you have to go figure out the capacity. If you don't have capacity, you're dead in the water, right? Once you figure out that true capacity, then you go to the landowner, right? Negotiate those rates, whatever the term of the agreement is, and then you lock down that land. Once you lock down the capacity and you know that capacity is there and you pay for it, then in kind of at the same time, you lock down land and then you begin your project. And Justin can kind of tell you some of the next steps of, hey, we've locked down land, now we've got the infrastructure, and kind of what the next steps are from there.
Yeah, once we got the land, it was more of a situation then where it's like, okay, who do we want to partner with? And that was where Mawson came into play. And we met with a bunch of different groups. But Mawson was one that, I'd seen their operations. I saw how efficient they were and how fast they could get up and operating. They had a lot of the supply chain issues that were present basically resolved because they had a lot of equipment on hand, and they had some relationships with some transformer groups. So there's a lot of things in this space. Some people think it's so easy and they just go plug in a computer to an electrical source and that's it. There's a lot more that goes into it. And there's some real, truly impactful supply chain issues that are going on in this industry. And so that's another aspect of finding your partner that you want to kind of use to get you up and running, coming from, again, a smaller operator. But that was what we looked at. It was like, okay, can they handle the supply chain issues? How fast could they get up and operating? Do they have experience scaling on this? And that was kind of the things we were looking for. So we kind of narrowed our target onto like 4 or 5 different operators that would kind of check the boxes that we were looking for. And I just started, I had already kind of worked on relationships. Like you mentioned, networking is a big aspect. When you're getting started, you need to make sure you're talking with everybody, and because everybody's got a little bit different perspective and you're going to learn something different from everybody. And listening to guys like Marty Bennett, they've been in the natural gas side of Bitcoin mining for a while, and so I'd listen to his podcast, and I'd read as much stuff as I could, and listen to guys like Steve Barber and guys who had already done some of the stuff that we want to do, and and visit with them about the projects, about hey, this is what we're trying to do, and just kind of learn from people that have done it. It's a big thing, and not having too much pride to be like, hey, look, I don't know what the hell I'm talking about. I need help on this. How can I do it? You guys have done it before. There's really not a lot of people in the space that have actually done some large-scale operations, and I'd consider large-scale really anything over 3 to 5 megawatts. I think is starting to get that's a serious operation, right? And the small ones are serious too, but where you can really start learning from them and talking about operational issues and then things to look out for and things that'll pop up. But that we made our checklist of boxes of what we needed to check, and then we start marketing it to those folks. And it got down to, are they willing to work with us on what we're asking for? Are they going to be creative on how to kind of manage the hot climate in Texas, how to manage the power markets, and have they done this before? Have they participated in curtailment and things like that? And then how much operational experience do they actually have, and how long they've been doing it? That was, to me, the biggest thing. So Mawson checked all the boxes, and honestly, they were a bunch of Australian dudes, and they're pretty fun to hang out with. So I was like, you know what, this will be fun. This will be a good time. So once we got past the term sheet, which took for freaking ever, the agreements really didn't take too long after that. So and the biggest thing is securing your position. So once you do that, then just have your checklist of boxes that you want to make sure you meet. And big one being not getting caught up in how much money or Bitcoin you can make doing it with someone who's going to be long term, because these storms that we're going through right now are going to happen. So don't get caught up in hey man, you're making 40 cents a terahash. That's not going to stick there. It's not going to stick there. So you need to be with a partner who can handle making 4 cents a terahash and not 40. And so that's one of the things we look for. And obviously you're taking a risk. You don't know everybody's internal books, but you try to make your best guess based on the evidence in front of you and the people that you're dealing with, and as much public information as you can get a hold of. And we made a decision that Mawson would be the right group for us, and that we agreed to a deal that was going to allow them to continue to operate in a depressed market. But as you know, the power prices, even in West Texas right now, with natural gas doing what it did, I mean, even they're expensive. They're expensive now. So you got to be more creative now in how to play the power game, and kind of your curtailment really is going to impact you now. And that's where they really can come into play and help out. So, that's the basis of it. I will say that a couple, 2-3 months ago, I started a law practice as well to kind of help people navigate some of this stuff. So if you guys do need help with any of that, let me know. It's really kind of taken off, and I know there's going to be a lot of people freaking out right now because of prices again, but I'm telling you, if you got capital and you can get into it right now or over the next 6 months, really, I think you're positioning yourself, as long as you keep all the things in mind that could come back and bite you, keep those in mind for going forward, then you're coming in at the right time. And blood in the water, I think Warren Buffett talks about it a lot. When everybody else is running away, it's when you need to go run into it. And so, if you're a true Bitcoiner, you're not going to let things like this shake you. You know that this is just part of the growth. It's how to shake out people that don't belong yet. And it's something that, we're all going to thrive later on. You just got to stick to it. And honestly, it's repeated itself over and over. This thing, it continually happens. So it sucks because it's going to hurt. It doesn't scare me though. And so it shouldn't scare you either. If you have been in the space for any period of time, you'll understand that, look, this is part of a healthy Bitcoin market. It takes these things to get to the next level. And so it's part of the evolution of it. And I'm excited. Plus I'm going to be freaking stacking sats like crazy right now.
Let's go. Now, I think the biggest thing to take away from what Justin was saying was just the utmost importance of understanding how to properly run an operation to the utmost efficiency.
Cost effective as much as possible.
That's it. You know, obviously your largest, as a Bitcoin miner, your largest OpEx is electricity, right? A lot of people think that when you partner with a power provider, right, I'm just going to get my bill and I got to pay it, right? We kind of saw a need when we started PumpJack that there wasn't enough direct service from the power providers, right? There's over 250 option one power providers that are licensed to sell to the mass market. There's over 500 energy brokers out in the market, right? There was just a lot of collusion, a lot of misinformation, a lot of kind of services kind of going sideways. And so what we do is by selling direct to our consumers, every month we get on a production call with our customers. Hey, Bob, how's the facility doing? How's the family? Da-da-da-da-da. But what we're really talking about is your energy usage. Hey, Justin, you know, what's going on? Oh, hey, Nuckolls, I'm taking half the facility down this month. We're going to be doing some maintenance. Oh, thanks for the heads up. I'm going to move that power to another consumer or sell it back into the market. The biggest thing that I see data miners kind of get taxed on a little bit is under and over usage penalties from power providers. On your power contract, it effectively states your usage quantities per month, okay? What I see a lot of times is these large market power providers, what they'll do is they will overstipulate or understipulate your usage quantities in the summer months. Why? Because if they understipulate your usage quantities and you go above your bandwidth, usually it's anywhere from 5 to 10% of you're allowed to exceed or go below your stipulated quantities. So if you go above that stipulated quantity, you are charged the current market rate of electricity, right? So if you're charged the current market rate of electricity in the middle of July, you're paying a huge amount of power, and that's just an extra way these large market power providers make extra margin. So having a true relationship with all of your vendors is the utmost importance of just managing cost. Is this simple communication, guys. That is all this is, right? A true operational partnership, like Justin's talking about. Get smart people that have done this, that they know their specialty, and they know what they're great at. They know how to manage these things. And if you can do that, and if you can run lean and mean, you are going to set yourself up for a massive windfall of success, bar none. So that's the biggest thing I can say is really just having a grasp on all of your costs, having a grasp on your operation, right? How can I run more efficient? Always ask yourself that. How can I run more efficient?
Yeah. I don't have anything else, but and I'm sure everybody's getting hungry. But does anybody got any questions? Yeah.
So I'm trying to talk about. So I still trade for it, right? But I have a friend. I'm trying to help him broker a site in Tennessee, a very large site. Now, when you started out with Brian, thank you. Well, you started out with Stunk Home. Everybody wants it all. They go, well, we got 100 megawatts. I want it all 3%. 3 cents. I got 500 megawatts. I want it all. How do you bring these people back down to freaking earth and say, no, start out and move up if you can do it? Because
Show them the collateral requirement.
Show me the money, eh?
That's Justin's absolutely right. The first thing when we send out our customer packet to a consumer, it's 4 documents. It's our NDA, it's our master service agreement, it's our credit app, and it's the Lone Star Infrastructure Act form. Within our credit app, there's a simple line that says, how much power are you requesting, right? You want 100 megawatts? You better go show me $10 million. And so there's obviously a very polite way to someone, hey, how's the project doing funded? But that's it. I mean, you really simply have to ask someone, do you have the money in the bank to go do this? And they're going to say, oh, well, we're kind of doing this, we're kind of doing that. And the people that actually have the money in the bank to go do it, you don't even need to ask them.
Yeah, and I'll say, again, coming from the oil and gas space, you don't hear that as much. People are like, hey, I want a well. I want to go drill a well, Well,
it's oil. Because
they know it sounds expensive, and it's complicated. I would argue understanding the power markets and that is more difficult than understanding how oil and gas works, right? So they just don't know yet. And I think everybody's heard, Bitcoin exploded, right? The price just blew up. and everybody gets excited, and they all want to be in it, and they all think that they can, and they just hear, I'm just plugging in machines. Well, I'm going to get as much power as possible. Hey, that 100 megawatts, I want all of it. But then it's like, look, there's way more to this than what you think. And the easiest way, I agree, is just show them the number. Because, you know, especially now that I've been kind of getting back on the legal side of things a lot more too, that's one of the things I've seen with a lot of the different clients we've had is like, I want 20 megawatts right now. And it's like, okay, here, need $2 million right now. They're like, well, wait, I wanted to spend that on machines. Well, yeah, I bet you did, but this is the way it works, you know? So that to me is the thing that like that's a quick way to cull out some of the LARPing.
Well, do they not understand if they're Bitcoin miners are in the energy business?
You would think, but there's a lot. I mean, I got a call the other day from a group in Florida about, you know, a big project they want to do, and they're talking about 500 megawatts and all this. And so I sent them basically some of the same information that he's talking about, and they're like, whoa, 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 whoa. You know, and I'm like, well, if you had the capital to do a $500 million project, this shouldn't freak you out. You know what I mean? But it's just, honestly, I think it's just a lack of education to what goes into the business side of it. So it'll change. I can guarantee you, like he was saying back in the 20s when people were really getting into oil and gas, and Norman Kinsey out in East Texas was buying leases outside the church for $1 an acre, and people thought he was an idiot. And then they started making money, and then everybody thought they could do it. And so then they're all trying to do it. But it's like, look, they missed the boat at that point, right? But he got it because he was educated about it up front, started small, built it into something else. And so the biggest thing to me is like encourage them, look, this is how much it costs. You need to start small, get your feet wet. You don't want to go drop $500 million on a project when you haven't run a $2 million project. Yeah, so.
What's up, fellas?
What up, Joel?
Joel, yeah. I got a question for you guys. I'm hoping, I'd just like to get your thoughts on it and share with everyone. But, you know, talk about the strategy of a deal, the typical deal that was the way it happened. I'm curious how you think the changing market now, what do you think deals are going to look like now? Do you think there's going to be some more M&A, some consolidation? Do you think it's going to be fire sales? Like, what do you think deals, like, what kind of deals could people have a look out for now?
Well, obviously, we've had a rise of, like, the mega farms and the mega mines that are, you know, you're talking 50, 60, 70, 100, 200 megawatt mines. And then you've got a lot of, like, you know, 5, 10s and all that around. Yeah, I think there's going to start being a lot of consolidation like oil and gas, right? You had basically all West Texas blew up and you had all these different operators. Well, it's really consolidated down into big, bulky positions amongst a lot fewer operators. And I absolutely see that happening the same way in here because it's going to be the only way out for some folks. And so, yeah, I think there could be a fire sale of acquisitions. I also think, obviously, there's going to be some bankruptcies, and there's going to be people just shutting down completely. And so, yeah, it's kind of a mixed match of all the above. And I also think there's going to be a lot of really attractive miners that pop up over the next 2 years because your capital entry costs, which is such a major factor in this, especially when you have short-term cycles, right? You have these short-term 4-year cycles of booms and busts in Bitcoin mining. And when you have that, it's like the guys that get in at the height or toward when it's on its way up, they usually are, I don't say usually, a lot of them are going to get overextended. And they took on financing machines, again, at those loan shark type rates. And that's going to bite them right now. I mean, it just will. There's no other way around it. So they're either going to have to start liquidating machines or liquidate themselves completely. And so you're going to have a lot of miners that, like, all of a sudden have an influx of capital at the right time that don't, you know, basically don't have any debt on their sheets, don't have any obligations that they got to keep up with. They're going to be able to go deploy capital and scoop up machines for, you know, I was talking to John, he thinks $25 a terahash potentially this year. Well, that's major difference. You know, I know of groups that have paid $115 a terahash. So that's catastrophic, right? And so, again, this will be the maturity of the industry, just like oil and gas sees it. And you still see people in oil and gas do the same thing, right? They're going to go blow it out and drop, you know, $500 million developing an area, and then oil prices are going to crash, and they're going to be underwater. So Yeah, I do. I think you're right. I think there's going to be a lot of consolidation amongst companies that are operating right now, and it's going to be by people that are better positioned, that are already active, but also groups coming in and scooping them up and basically either rebranding them, changing their name, or just buying them out of bankruptcy or a really dire kind of financial situation.
To kind of just real quick add to what Justin was saying, Justin's spot on and everything he said.
Thank you.
When you look at a mining machine, right? It's a depreciating asset. Okay. In my personal opinion, the value of a big miner, right, of what they're really looking at is they're looking at of a standpoint of how much infrastructure can I go buy, right? How many megawatts can I continue to expand my portfolio? And so if you really kind of think about it and you kind of just remove Bitcoin from an equation for a second and you just kind of thinking about of, hey, how many megawatts of infrastructure do I really have, right? Because when a mining group, a large miner kind of looks at your operation, right, they're going to see your machines, oh yeah, this is great, you know, they're depreciating, probably got a couple of, what they're really looking at is, what can I do with this infrastructure? What can I do with this capacity, right? So if you are in a neighborhood, right, if you're in West Texas and you got a great zip code and you've got great high voltage infrastructure, you got great land access, right? That is what makes it attractive for a large scale miner to be like, you know what? I'm going to go buy a J Energy. I'm going to go buy this guy. I'm going to go buy that guy. It is all an infrastructure play. So always kind of keep that in mind of, hey, while Bitcoin is a part of this equation, but at the end of the day, it starts with land and energy. And that's it.
Justin and Ryan, I do not want to be the reason that we're late for lunch. So keep my answer short, if you would.
You know who I am, Curtis. There's no way I'll keep it
Curtis
short,
should be
man.
up here too.
So everybody's got a 50 megawatt substation in Texas. You pioneered your J Energy with microgrids. If I am only ignorant and know those two words, high level, how to integrate microgrids, and then maybe also give Ryan a chance to weigh in. Is there still any opportunity in those microgrids to leverage, power agreements?
Yeah, well, I don't, yes, right, you'd probably be able to touch on this better. As far as, I'll speak to the opportunities that I'm seeing that are out there. There's a lot actually right now, and this is where the education, like the oil and gas industry, has started to catch up a little bit. They're recognizing that the economics on Bitcoin mining have to meet a certain threshold, right? You want to try to stay below a certain kilowatt per hour price. I met with an oil and gas company yesterday, and they totally got it. I mean, they were it was like a complete 180 from where it was 2 years ago. And so, yeah, there are opportunities that are out there that are scalable flare gas sites. We are in the process of moving our stuff right now to a better location for the same reason. And so they're just few and far between, right? There's a lot of the Bitcoin mining and flare talk is, I don't want to say it's a red herring, but in a way it kind of is. There's not that many scalable Bitcoin miner sites where you can grow as a miner. There's a lot of opportunities to treat that as a service company. Are most of you guys oil and gas folks at all in here? Or
Show hands.
yeah,
Very nice.
yeah. All right. If you are, you'll understand this. There's flares decline fast, right? The flare usually is going to be on the IP of a well, and within 6 months, you've cut it in half. And so the scalable flare sites are just, there's not very many. There's not very many at all. And there's very unique situations where they actually exist. And so I've been getting a call about, when I say a lot, I think honestly, and I'm not trying to toot my own horn, but I think it's just because getting that TPL deal done, really, people who are in this oil and gas space all know who they are. They understand that that's a big deal to get TPL on board with allocating capital to Bitcoin mining. So now they're like, hey, we'll call Jay. They did a deal with TPL. That's an oil and gas group. We've got a big flare site here that we'd like to do something with. Obviously, TPL understood the economics. I bet they can get something that we'll understand. And so I think it's more of just a trust thing that they've brought those to me. But with the amount of calls I've got, it's like, man, I know of probably 15 to 20 scalable flare sites that are going to be available either now or over the next 6 months to a year, that are places where miners could actually build a future on a little microgrid, basically, right? You're setting up generation out there to take the flare gas and build out a actual scalable mine. The smaller flare sites, that's a service company deal, I think, is where that future lies, because you're not tied to making money just from the Bitcoin price. You're providing it as a service, like as a midstream company, because you can't get a pipeline in, right? And so, hey, I can get a pipeline in, and we are seeing that. In fact, the group I talked to yesterday, basically the pipeline, you got bolts are busting on the pipe because you don't have any room. And so that's where the Bitcoin miners come into play. Even in a depressed Bitcoin market, they can come in and start offloading capacity issues for operators. So that's what I think the more the flare gas Bitcoin opportunity is. But there are still areas where you can go build, like a microgrid.
And I know we're about to hit lunch, so I'll keep this real quick. For every 1 MCF, million cubic feet of gas that you get, you're going to generate about 4 megawatts of electricity. So what Justin is trying to say is, for a mega mine, right, 100 megawatt facility, the amount of energy intensity that you need to manage and sustain that microgrid for long periods of time is significant. They are out there for sure, but they are few far in between, right? They're tough to come by. A big thing in Texas right now that we're starting to see is some miners trying to do dual fed access, right? They plug into a windmill, right? And they also have a secondary line plugged into the local distribution system. So the average runtime of a Bitcoin mining facility in Texas that is using a off-grid approach with wind or solar is like 75 to 80%. The reason of that is when the power market is blowing out in Texas, that wind farm or that solar farm is cutting you off and selling back into the grid, right? So microgrids can work, but when you're talking truly at scale, and if you really want to go play at scale on-grid mining operations, if you really have the cash and the capital behind you, I mean, Texas has close to 175,000 megawatts of built-out generation, right? We're only putting out about 75,000. Hopefully, probably see 80,000 next year. But microgrids are just tough because of the limit of how much energy you can generate and where you want to go.
I'm working one right now that is 140 megawatts. This is all microgrid, but that's a big microgrid, and it's going to scale to 500. Now that's super rare, right? There's not very many opportunities like that, but yeah, they're out there. There's not a ton.
Justin, got a question
Chris,
here.
what's up, man? Yeah.
I was hoping you could elaborate on royalty interests. So, like, I've heard a scenario where a lease contract is the asset is stranded, the gas is stranded, yet in the lease contract, maybe it's tied to an index price, which is tied to a hub, somewhere Henry Hub or Waha or wherever. My question is, are these royalty owners, are they reasonable? Are they amenable to understand that a Bitcoin miner is not going to pay index price?
Right.
And like we're bringing the market to them. How is their feeling on that?
So, and I'm going to caveat this with, now Chris, it's a unique situation because we are you are our client, but if I'm going to say this, you need to talk to your own attorney about your specific situation, okay? But yeah, in situations like that, most of the time, I haven't had an issue with the royalty owners, right? They typically do come ask you questions about it. And, coming from a land background, I'm used to dealing with landowners on that side of things. But what I tell everybody, and again, this depends on your lease, if that gas is not able to get to a market, you can't get a pipeline in. There's nowhere to take it away from. The market, even if they're now, and again, this would depend on the lease, but even if they're expecting it to be paid based on a market rate that's nearby, like the Cheyenne Hub or the Waha Hub, something like that, if it's not marketable, a typical lease, you're going to pay them based on the hydrocarbon sales, the proceeds for generated from the hydrocarbon sales. If that is $1, then they're entitled to their royalty based on that dollar. If they are, tying it specifically to a price, and they're like, we are paid for gas, regardless of whether or not you can get it to this market based on the Waha price, then you would have to pay them on the Waha price. I don't think you're going to run into many leases like that, though, just because, operators typically are going to be like, look, I got to get it to market. If I can't get it to market, there is no market. I mean, that's the industry standard, right? But, I'm not going to say that that's not in any lease. There could be, and very likely there probably is somewhere. But most of the time, like, if you can't get it to a market, you're not going to have to pay that market price, because the market is then whatever someone is willing to buy that gas for. And so that could be $1, it could be 50 cents, whatever it may be. I always would encourage you, though, because I've had some operators come and tell me they're not paying anything to the royalty owners, and they are selling the gas. And that is a problem. That's something that is not going to fly. And another thing that I think is a problem is when miners who also may own an interest in a well are not having a change of custody of that gas on a pad. You have to have a change of custody. If you don't go from oil and gas operator owns these molecules, and the royalty owners own the molecules that are coming out of that well bore, and now I just set up a Bitcoin mining operation, and I'm not selling that gas to a third party, and I'm using it to mine Bitcoin, I think you're opening a door to a very bad problem that none of us as Bitcoin miners, especially off-grid Bitcoin miners, want to deal with. And I know that's not your situation. I know that you're not doing that, but I have had some groups tell me that that's what they're doing, and that's an area where I think you're going to open up litigation that nobody really wants to have opened up. And so, as long as you have a change of custody on the pad, and which, do you guys understand what I'm saying when I say that change of custody?
I mean, that's a financial transaction.
Right. So basically, assume there's operator, and I'll use Anadarko since they're not around anymore. I used to work for them. We have Anadarko, and then we got a third-party mining group. Well, Anadarko wants to stay in the chain and get a portion of the Bitcoin, so they're just like, well, let's just use the gas right here, and we'll mine Bitcoin with it. That's a problem. If they say, hey, we're going to start Anadarko mining, and they start that entity, and we're going to sell the gas to this mining party, and we're going to join in that mining operation with you, that's a whole different story. That's the market rate that they could get this group to pay for, right? And if you could get another miner to come in and pay for that gas, then that would be the market rate. But the market rate is determined based on what they can sell that gas for. Now, if they can get it into a pipeline and they choose not to, that's another area where it's like, look, that gas is already tied in, and you can easily get an economic rate for it, but you're choosing to sell it to a Bitcoin miner for 50 cents. The royalty owners may have a case for like, hey, no, like you're violating your duty to me. Like, you should be marketing my gas for the highest proceeds possible. And so, yeah, there's always going to be like scenarios that have little different things, but typically in most leases you're going to see have a change of custody. If the market is not there from a pipeline, and you are a Bitcoin miner and you determine what you're willing to pay, and the economics dictate that, that's the market, and you should be fine. No problem, man.
Thanks.
Thanks, everyone.
Yeah, thank you, guys. Thanks, John.
Yeah, let's get big.